This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Job machine. The economy created a lot of jobs last month, sending stocks to a record. But a near-term rate hike may not be a done deal yet.
Risky move. Bristol Myers Squibb shares plunged today, wiping out billions in market value as a high-profile cancer drug trial fails.
Bright idea. Meet the electrician who started his own business and is now advising other entrepreneurs to become CEO warriors. His story and more tonight on Nightly Business Report for Friday, August 5th.
Good evening, everyone. The S&P 500 and the Nasdaq closed at all-time highs, and for that, you can thank a blowout jobs report that both exceeded expectations and eased fears of a labor market and economic slowdown. The Dow Jones Industrial Average soared 191 points to 18,543. Not a record, but the records were with Nasdaq up 54 and the S&P 500, which gained 18. Here are the numbers that sparked the rally. Employers added 255,000 jobs, much better than the 179,000 economists expected. The jobless rate held steady at 4.9% as more Americans looked for work, and wages also picked up. We have two reports tonight. Hampton Pearson on the best two-month stretch of hiring this year. But we begin with Bob Bazzani on the record-setting day for stocks.
It's been a broad rally, not just the S&P 500, but even the S&P mid-cap and the S&P small-cap indices are right at historic highs as well. Why is this happening? Well, the jobs report is the immediate catalyst, but remember, we didn't have far to go in the first place. The S&P 500 was never more than about 1% from an historic high in the past month. So in addition to the rally in the major indices, the market's showing signs of classic rotation. In the last several weeks, technology and biotech have been big market leaders. So earnings of big technology names like Microsoft have been particularly strong, beating estimates by a much wider margin than analysts had expected. At the same time, prior market leaders like utilities and telecom and consumer staples, they've been lagging. Okay, why the move up? Today's job report is the immediate catalyst, as I mentioned, but the rally didn't start this morning. First, overall earnings have been okay, and there are fewer downward revisions in the second half of the year than many feared. Second, crude oil, which gave everyone a scare a week ago, is showing stability around $41. And third, there's a lot more talk of fiscal stimulus, not just monetary stimulus, in the UK, Europe, and the US. Finally, the Brexit worries have been contained so far. For Nightly Business Report, I'm Bob Bassani at the New York Stock Exchange.
For a second straight month, American employers delivered blockbuster job growth. 255,000 new workers added to payrolls in July, with June revised upward to 292,000.
About the best news we could expect. It suggests the economy is not stalling, it's coming back.
More part-time workers found full-time jobs in July, good-paying jobs. Professional and business services led overall growth, adding 70,000 new hires, followed closely by the leisure and hospitality industry, up 45,000, and healthcare, with 43,000 new hires.
If you look at all the numbers and take them at face value, this is a very good jobs report, no doubt about it.
The only negative sector, mining, losing another 6,000 jobs in July, employment falling by 220,000 since the industry peaked nearly 2 years ago. With job growth for the last 3 months now averaging 190,000 per month, leading Wall Street economists see the rate hike clouds clearing for the Federal Reserve.
This should be enough. If nothing goes wrong, this should be enough to tilt the Fed towards actually raising rates in September and then again in December.
For 1 month at least, the strong jobs report offsets concerns about overall weak economic growth and the Brexit fallout on the American economy. For Nightly Business Report, I'm Hampton Pearson in Washington.
And joining us now for more on today's robust jobs report is Vincent Reinhart, Chief Economist for Standish Mellon Asset Management. Good to see you. Welcome, Vincent. Nice to have you here.
Thanks for having me. And robust is the right word. It was hard to find some bad news in that report.
And there were also some revisions to the upside as well. So were the worries of earlier this year that perhaps we were headed towards another economic downturn not well founded?
after this month's report, last month's report, and the revisions in both to earlier months, it really looks like May was the aberration. May, when job creation basically came to a standstill. We got confirmation that there's strong forward momentum in activity because jobs were created. We also found that we're not pushing as hard on resource slack because more than 400,000 people came back into the labor market. And we got a pickup in average hourly earnings. So that implies that income's being created, and that income will be spent later in the year.
There really wasn't much to nitpick here, Vince, at all. But the growth in the construction and manufacturing sector was much smaller than it was in hospitality and other services. This is a political year. I can well imagine that critics of this report will say, we replaced those good manufacturing jobs with jobs at Hardee's and Wendy's. What do you say to that?
Don't ever challenge an economist to nitpick, because they certainly can do that. And I think you're right. This is another chance to use the word rotation. We're creating jobs. They're not all good. And we have some real challenges. Moreover, we're starting from a low base. The participation rate went up 1/10, but it's still 3 percentage points lower than just a couple years back. And there's another worrisome thing about this employment report if you think about the bigger picture. Over the last year, we've got about 1.7% increase in payroll employment. That's probably about the pace of real GDP growth. That means we've gotten no productivity over the last year.
What does the Fed do with this report?
The Fed breathes a sigh of relief because the gains in payroll suggest that there is a base for continued economic growth. It validates something that Janet Yellen has been talking about for a long time, and that is, if you run the labor market hot, you can bring people back into the labor market. That's that 400,000 increases in participation. And they have a runway because average hourly earnings are up, but they're only 2.6% year on year. And some of that cost pressures are offset by lower energy prices. I think the Fed takes this number and it validates the case for tightening monetary policy in 2016.
Okay.
If they get another number this strong before the September meeting, they might tighten, but more likely they go once in December.
All right, Vincent, thank you very much. Vince Reinhart with Standish Mellon Asset Management.
Bristol-Myers Squibb made a risky bet and lost. One of the company's most promising and best-selling cancer treatments failed in a trial for patients with the most common form of newly diagnosed lung cancer. The drug is already on the market for other types of cancers, but Bristol wanted this immunotherapy to broaden out and be used a risky research strategy. Now, that sent shares plummeting 16%, wiping out about $20 billion of Bristol's market value. But as Aditi Roy reports, this setback for Bristol may not be as bad as it seems.
The Phase 3 trial failure is a blow to Bristol-Myers Squibb and patients. Still, some analysts say things aren't hopeless for Bristol-Myers Squibb despite market reaction.
I think Bristol's down a little much. You would believe that the story today in lung cancer for this particular drug from Bristol-Myers would never again raise its head in lung cancer. That is to say that there would be no hope for Bristol-Myers to be in lung cancer in the future. And my sense is that's probably incorrect.
The news was a win for Merck, whose competing drug Keytruda recently succeeded in a similar trial. Merck shares soared on the news. Bristol-Myers was shooting for a home run, trying to use an already successful cancer drug to take on lung cancer, one of the highest unmet needs of all cancers, and at least one analyst estimates the market at $12 billion. It's also the most common cause of all cancer deaths, according to the National Cancer Institute. So Bristol-Myers went for the broadest trial possible with a bigger risk of failure.
I do think they would have had similar outcomes if, in fact, Bristol-Myers' trial in lung cancer was exactly like Merck's trial in lung cancer. And the reason for that is simple. The drugs are extraordinarily similar, almost identical. So you would, while it is speculative, you would provide a high probability that Bristol's success under that scenario would be positive.
Some traders urge investors not to give up on the drug maker so quickly.
The stock is totally overreacting short term. This is still a very impressive growth story, and it's now on sale. You get a nice yield. And so I think, by the way, you could also own Merck. I think you want to own them both.
Bristol Myers Squibb is still testing Opdivo in conjunction with its drug Yervoy to treat this lung cancer. Analysts believe this type of combination therapy could be a powerful weapon in the future battle against lung cancer.
It's been our view that combination therapy in lung cancer will actually be the therapy of the future, and we're not quite there. Those trials are being run today by Bristol Myers, and there are others, including AstraZeneca, that have combination therapy. Merck has some trials as well, but they're much earlier in development. My sense is the market's going to change dramatically in favor of that combination therapy. Bristol seems to be in the lead there.
For Nightly Business Report, I'm Aditi Roy.
The trade deficit rose to a 10-month high in June, driven by a big rise in imports of oil and Chinese goods. But exports edged up slightly, just slightly, due to the strong dollar and global weakness. This marks the third straight month of increases.
Well, as trade continues to be a sensitive political topic this election cycle, Republican presidential nominee Donald Trump today named his new economic team. John Harwood joins us from Washington. John, what do we know about his new advisors? Who's in and who maybe conspicuously isn't?
Well, first of all, it's an all-male team, so it's not diverse. Second of all, it is not the A-team of Republican presidential economic advisors, but it does share his concern about trade. One of the members, for example, is Peter Navarro of UC Irvine, who is an economist who's talked a lot about the problems associated with international trade deals and our trade deficit with China. You've got people like John Paulson, Harold Hamm, the oil and gas executive, Steve Moore, the conservative economist, David Malpass, used to work for Bear Stearns. And so they're trying to work with Donald Trump and have more meat on the policy bones, which Trump has not yet provided in full detail.
Well, what do we know, because he's going to give this economic policy speech on Monday. He certainly has talked a lot about trade and jobs, but what can we expect? And do we know anything more about the positions that he's going to put forward on the economy?
Not in detail, Sue, but I think that we can expect he'll modify his tax plan. When you look at what Donald Trump rolled out last year, it was a gargantuan tax cut. Top personal rate of 25%, top cap gains rate of 20%, a 15% rate on business income, a 0% elimination of the estate tax. It would add $10 trillion to the budget deficit. Now, his advisors have acknowledged that that needs to shrink, and we expect in this speech that he's going to narrow it somewhat. So maybe Larry Kudlow, for example, has said maybe it'll be a $3 trillion addition to the deficit as opposed to 10.
All right, John, we have to leave it there. We'll ask John Harwood in Washington. We'll know more on Monday.
Still ahead, full-time gamers. But don't just play those video games, create them, because that could land you a high-paying job.
The Pokemon Go craze is just the latest evidence of the increased appetite for gaming. And that means demand for designers and coders is more intense than ever. Kate Rogers is in Salt Lake City to show us where the jobs are.
14-year-old Nabiha Barkatola isn't spending her summer playing sports or hitting the beach. She's learning to make video games instead.
All of the guys at school, they would be like, "No way, you play games? You're so weird." I think that's the reason why a lot of girls don't go into gaming.
Nabiha is part of Girls Make Games, a summer camp that's trying to introduce more girls to opportunities in an industry that's long been dominated by males. Over the past 3 summers, the camp has taught more than 800 girls the fundamentals of programming and design.
At first, I had no idea how to code, what is coding? But like after attending Girls Make Games, I'm pretty confident in my coding.
During the camp, girls get to create team video games, pitch them to industry experts, and even get them published. For founder Layla Shabir, it's a chance to dispel the misconception that women aren't interested in video games, as well as to foster female talent that game companies are now actively seeking.
They want a diverse workforce. They want more ideas and more voices, and this is how they're going to get it.
These girls will be glad they got a head start in an industry that's booming. The global gaming industry is poised to hit $90 billion by the year 2020, according to PwC, and experts within the industry say that jobs could grow by about 10% in the next several years. That growth is the reason companies like Salt Lake City-based WildWorks are expanding. Beyond WildWorks, Salt Lake City is home to other big gaming studios, including Electronic Arts.
Right now, we're looking for engineers or programmers who have a background in the gaming industry.
With current staff of over 120, WildWorks is also looking for game designers, artists, and community managers. And since the primary audience for their flagship game Animal Jam is girls, they'd like to hire more women.
We want to continue to augment our female staff because they bring a perspective, a variety, an experience, especially as we make games that resonate more with girls than with boys.
3D artist Emily Vinson is new to the industry and feels optimistic about its outlook.
You definitely still feel a bro culture kind of going on, but I think women are getting more and more involved as they realize that they can and be accepted.
Shabir is excited too.
How their eyes light up when they talk about their games, and when they say things like, I had no idea making a game was this easy or making a game was this fun. I can't imagine what they're going to end up making, and I'm very excited for that.
For Nightly Business Report, I'm Kate Rogers, Salt Lake City.
Amazon's first branded delivery jet makes its debut, and that's where we begin tonight's market focus. The company unveiled its first of 40 planes that will be used to help speed up deliveries. In a deal announced back in May, Amazon will lease 40 planes from Atlas Air and ATSG over the next 2 years. Amazon shares rose a fraction to $765.98. American Airlines gives a pay raise to 30,000 employees. The airline said it reached an agreement with a labor union to give significant pay hikes to a portion of the company's ground workers. Depending on their position, employees can expect to receive a raise of 15 to 55%. Shares were up more than 2.5% to $34.45.
Private equity firm Apollo Global Management reportedly in talks now to buy the cloud computing company Rackspace. According to Reuters, a possible deal could be worth more than $3.5 billion. Apollo and Rackspace, no comment. Shares of Rackspace up 10% on the news to $29.27. Meantime, Berkshire Hathaway saw its profits rise 25%. The results were helped by an improvement in insurance underwriting and the purchase of precision cast parts. But operating results at Warren Buffett's company did fall short of forecasts. Shares barely moved in after-hours trading. They closed the regular session up about 1.5%. And no, you're not wrong. That is $218,010.
This week's Market Monitor says now is the time to invest in small-cap stocks. Joining us is Barry James, President and Portfolio Manager with James Investment Research. It's always good to talk to you, Barry. Welcome. Let's get right
Thank you. Glad to be with you.
Let's get right to your stock picks. Your first one is McDermott. The symbol is MDR. Why do you like it?
Well, first of all, it's one of the larger offshore drilling companies, and they do it from engineering all the way to the construction of the facilities. They're very, very cheap, trading about 12 times the earnings, and they're actually trading at less than what the accountants say they're worth, which means less than book value. And they have a backlog that's bigger than the revenues that they made last year. So in spite of the price of oil, they seem to be holding up pretty well.
Let's talk about Frontline. They make tankers.
They do. They are the largest tanker, oil tanker company in the world. And the reason that we like them is that there's a lot of oil in surplus today. And that's floating around, actually, in a lot of these tankers. But they restructured themselves back in 2012. They're the low cost, in terms of tankers. They have good earnings, and you're getting 20% yield. Now, there's no promise that'll stay forever. But for right now, they can afford to pay you a 20% yield while you wait.
And finally, Brandywine Realty Trust. And you say they're diversified, and that's one of the reasons why you like it.
That's exactly right. They're not just in commercial or retail space. They have all of those. And they also have the whole whole smear of things, from doing the planning to the actual management, and they focus on just a few really, really high-end areas like Washington, D.C. and Austin, and so they're doing a good job there. You're getting about a 4% yield, and their earnings have been coming in pretty well. A well-run company, and we think it has good prospects.
Quick thought on the future of the market on this day that the S&P and Nasdaq set records.
Well, we still see that there's an upward pattern kind of after the Brexit setback that we had. Stocks have been on a run. A lot of the pundits are actually a bit nervous about the market at these levels. And we try to measure risk. We do our own research and measure risk each week. And we say it's only modest. So we'd say have a modest approach to your equity holdings right now, maybe 50, 55% in stocks. And one of the reasons we like small stocks is they've been ignored for a long time, and they could run for quite a bit of time as well.
All right. Have a great weekend, Barry. Nice to see you again. Barry James with James Investment Research.
Coming up, want to be your own boss? An electrician figured out how to do it, and now he's teaching others how to run better businesses. That's tonight's Bright Idea.
Here's a look at what to watch next week. On Tuesday, Dow component Disney reports its earnings, and investors will be paying attention to what the company says about cord cutting. On Thursday, the American consumer will be in focus when Macy's, Kohl's, and Nordstrom release their quarterly results. And on Friday, retail sales and producer prices are due out. That's what to watch for next week.
So what does an electrician know about running a company? Well, some know quite a bit, others not so much. That's why a New Jersey electrician who once said there's got to be a better way and then figured it out got the bright idea to share his business management knowledge. For a price, of course. The way he sees it, he's helping others create more jobs than he could ever create on his own.
That's a big deal.
Mike Agliaro can get a charge out of people. And no wonder. At age 19, he became a full-time electrician. 3 years later, he and a partner started Gold Medal Electrical Contracting in central New Jersey. They worked long hours, did everything themselves, but like so many small business owners, they did little else.
We got so burnt out that my partner came to me one morning and he said, Mike, I'm done.
In 2004, after 11 years, it was either unplug the business or find a better way. So they invested heavily to learn how to actually run a serious business.
We spent over $800,000 on training the very best we can find.
They started reading. They went to Disney to learn about corporate culture, Zappos to become more efficient. But one thing stuck out.
Everything's marketing, and marketing is everything.
The simplest of tweaks helped turn their business and their lives around.
I did some study and I found out, well, yellow is the first color the eye sees. So I was like, let's have yellow trucks. Nobody had yellow trucks out there. And people were telling us, I see you everywhere. I was like, everywhere? We had like 3 trucks. I was like, okay, we're on to something big right now.
Very big. In a few years, Gold Medal added plumbing, heating, and cooling services. Now, with 145 trucks and 190 employees, Gold Medal is on track to hit $32 million in sales this year. He's only in the office about 2 or 3 times a week now, but he's still busy because other service company owners started asking how he did it. That's when he realized his knowledge, his experience, might be more valuable to them even than it is to him.
Nobody's really stepping in and really serving these people. So I said, why don't we go out there and let's just change lives for anybody in any type of service business.
It was the germ of what would become a multi-million-dollar idea. Phone calls and Facebook posts grew into a full-blown consulting business in 2013. 1 year in, another marketing change, a new name for the consultancy, CEO Warrior.
Could change trend.
Annual sales, more than $3 million. Eric Corbett became a Warrior 3 years ago. He was about to buy his brother out and take over the Maryland plumbing business their father started in 1960.
he signed up for a 4-day Warrior event.
We were pretty average at that point. And we said, you know what? We don't want to be average.
Leadership. 5 times a year, Agliaro hosts these events, drawing 100 or so service-oriented companies that pay about $7,500 each. Corbett later upgraded to the Warrior Fast Track. That stepped-up tier costs $36,000, but gets you full-time access to Agliaro's business improvement team, first-hand looks inside gold medal, even a taste of martial arts, a longtime Agliaro passion. There are about 95 fast trackers like Corbett. In 3 years, his business has grown from 22 employees to 30. Revenues are up from less than $4 million a year to more than $4.5 million.
We're really healthy as a company, and we're positioned to have some really great growth here moving forward.
That's the kind of rewiring Mike Agliaro likes.
Why do I exist on this planet? And it's not to be an electrician. It was never to be that. I knew there was a bigger part in it, and this is the bigger why for me, change lives.
Agliaro has also written 4 books. He's beginning to invest in commercial real estate, following the advice he found himself giving to other CEOs to manage and protect their wealth by diversifying their business interests. A sideline became his passion.
Which is a fantastic thing. I love bright ideas. That's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
And thanks from me as well. Have a great weekend, everybody. I'm Tyler Mathisen. We'll see you here on Monday.